Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is the 5th of June already. And if it sounds like I have a cold, it's because seasonal allergies are kicking my butt today. But let's get into what's happening in the markets today because we see green across the board today. So, just to give you a rundown of futures, we have July canola up $3.90 at 698.90. We have Minneapolis wheat up 2.5 cents at 626. Kansas wheat up 2 to 542 and a half. Chicago wheat up 2.25 to 545 and a half. Soybeans up 6.75 to 1051 and three quarter. Soybeans are up 3/4 of a cent at 439. What did I say? Corn is up 3/4 of a cent at 439 and a half. And the Canadian dollar is up at 73.18 today, a little bit higher than yesterday. Live cattle. We're going to talk a lot about cattle today. $4.50 per hundredweight, or 4.5 cents per pound for live cattle. 5.25 for feeder cattle at 309.15 on the cattle front. All right, let's get into it, shall we? Here is August live cattle. That is the most liquid, or the contract with the most open interest on it now. Closed at 216 today. That is a new all-time high. Easily breezed through the high from back on May the 14th, making a brand new fresh high in this market. Absolutely incredible how strong this market is. The reason is this past week's slaughter is one of the smallest Memorial Day slaughter weeks on record. If not the smallest, I think. Packers were faced with declining supplies of fed cattle and pulled down the slaughter number to 477,000, which is 93,000 under last week and down about 62,000 from last year's holiday week. So there's a widespread feeling across the industry and futures traders that the most recent surge in cattle prices, though, is not sustainable. These prices in live cattle have not yet immediately been felt at the grocery store, restaurant menu, so we haven't seen like the supply demand curve shift yet from the consumer side. But one thing that I will say about markets is that they can remain irrational longer than you can remain solvent oftentimes. So, although these markets seem irrational, that doesn't necessarily mean they're going to correct right away. Just to kind of move into feeder cattle here, we also saw an all-time high, maybe not as aggressive, so that the gains in feeder cattle looked impressive, but the candle on the chart looks a little bit less impressive, but still making all-time new highs here in this market. Just to kind of show you what that looks like from a weekly continuous standpoint, this, just to kind of illustrate how high these prices are, this is live cattle once again from a weekly continuous standpoint. This chart goes back to late 2015, early 2016, but there's no higher prices prior to this either. And one thing on this channel, we talk about speculative positioning, and I think it's important to take a look at that as well. In live cattle, the spec position is not at an all-time high. You would think it is at this point in time. We're probably stretching back towards that after today's action. But starting the week, starting on Tuesday of last week, the fund position had actually come off quite considerably, and as profit taking and those types of things took hold. So the fact that this is making new highs is likely because there's probably some speculative money in here as well, regaining some of that strength. But as of the last COT report, we weren't in a position to say that the fund position was at a record high and was ripe for sell-off. It had already started to do that, and so these new highs are interesting in relation to that. This is the feeder cattle. There we're seeing the fund position stretch. It's 32,000 contracts long at this time as this makes a new high. So perhaps you could make an argument that this market is a little bit more overheated, at least from the speculative standpoint, than the live cattle is. But still, there are underlying fundamentals that are driving this. So it's not just speculative money that is flowing. There's also some S&D in here with these cattle markets making new highs as well. All right. Shifting into the grain side, a little bit of an interesting day in corn. Now, if you look at July corn, it looks like a snooze fest in here. 439 it closed at today. We've kind of had, these doji candles, almost three in a row, where the market just kind of opens and closes near, you know, near to where they opened in the at the beginning of the session. We see some volatility on either side, but relatively low volatility overall. Um, but when you look at the December corn chart, it looks a little bit different. We've seen 2 or 3 strong days in a row now, and that has moved up, broken through the 20-day moving average yesterday, solidly did so today, moved up to test the convergence of the 50-day and the 200-day. The 100-day is still kind of hanging out by these previous highs from back in, third week of May. But so there might be some resistance there. But the December corn chart looks a little bit stronger, and that could be weather related. Although I think some of the dryness was taken out of the 8 to 14 day in the last little while, so there was kind of an anomaly model run from what it looks like. And I read some other analysts' takes on it as well, and that's the feeling that I got from that. So it could be a bit of a weather driven rally here for corn. As there is, a little bit of concern of dryness, I think, but we're definitely seeing corn, diverge from the kind of monotony that is the July contract, at least at this point. Soybeans also were up today again. 3 days in a row we've seen these row crops higher. There was a phone call today between President Trump and Chinese President Xi. That resulted in today's gains today. We think because they kind of started after that phone call took place. There I think the talks focused mostly on trade, so I think that that's probably why we are seeing the positive results in soybeans at this point. So good call, I guess. Some phone calls result in good market movements, and that is one of those. Moving on to canola here. I just put up the November canola. The July and November are actually behaving relatively similar as of late. As you can see, this November canola, it punched below the 20-day moving average on Tuesday. On Monday, recovered to the 20-day, tried to break above the 20-day yesterday, tried again today. So far, it has failed to do that. Now, it also has failed to kind of break down below the 670 level. So this kind of channel in red here that brings you down to the 23.6% Fibonacci is still intact. So it's kind of, sideways action here in canola as well. Not super interesting. I think what is more interesting to me is looking at some of these board crush margins and how they're deteriorating. Now we are seeing some of the lows that we've seen for the year now coming into play here in early June. We saw a punch lower as well in late May. The official board margin at this point was $64. That's the lowest it's been in quite some time, or for sure in the lowest fifth percentile for the year. As we move forward in the calendar, it does look a little bit better from a nominal standpoint. In the 80s or 90s as far as crush margins go, but still some of the lowest that we've seen in the last year. As you can see here, crush margins improved a little bit overall today, but from a day ago. But still, if you look at where they were a week ago, NOV OC 25 crush margin a week ago was 122. That's dropped to 98. Now a month ago that was 146. Year ago 116. Sure, it was a little bit weaker a year ago, but we are definitely coming off of some better crush margins, and those are falling quite considerably. NOV Dees at 103 a month ago. That was also 148 and 92. These are 148 Canadian, 127 Canadian, and now 103. So we're definitely seeing some weakness in the crush margin space, which doesn't necessarily show itself early or in this. Obviously these Nov Oct and Nov Dece. Crush margins are only going to show themselves once we get into the new crop. So as of right now, I think that's creating a bit of a disincentive for crush in the new crop position, and I think we are seeing the inverse in bids kind of reflect that to some degree. Cash bids are greater than $1 a bushel lower in the new crop position right now than they are in the old crop. Looking at Minneapolis wheat here, we did see a little bit of a positive movement today. Green candle today. As you can see here, this market continues to, kind of have a hard time breaking above this 200-day moving average. I think if we could see that happen and we can see a nice sustained close, even if we could see a nice little candle above the 200-day moving average for a day, that would give some good confidence. Of course, there is some resistance up here at 640 on the nearby on the July contract. This July contract, it still has the most open interest in it, but it soon will come towards delivery as well, and we'll start to see the OI shift to the SEP and the DECE as well. But right now, we're still trading July as the front month. Wanted to kind of touch on what we've been working on. We saw the Canadian merchandise trade database release today. So I've been busy updating our charts for that. That will be available in our weekly report, which we will publish tomorrow afternoon after the close. That is something that is exclusive to our paying subscribers. So if you haven't yet, subscribe to our insights. They're only $99 a month, which is less than $1,200 a year. You get all of our weekly reports. You get our morning commentaries. You get our ad hoc reports in the middle of the week. This week we talked about the Australian Bears report that came out in our hot takes report, and anything else that's exclusive to our paid subscribers is there. So you just click on the subscribe here button and it takes you to this fancy site here where you put in your email, your phone, and your payment method. And that's it. We won't bug you for anything else, and you can cancel anytime. It is a monthly subscription. So if you like it for 6 months during the growing season and harvest, and want to take the winter off, you can do that. Or if you want to keep going, you can keep going all year. It'll just keep itself going. So thank you for joining us. One last thing. Great game last night from the Oilers. Oops, what's happening here? A late overtime goal by our German friend, Leon Draisaitl, to edge the Oilers higher in game 1 of the Stanley Cup final. The cup belongs in Canada. Sorry, Florida, but I think the cup belongs in Canada. Hopefully this is the year that it comes back. Thanks for joining us, and we will see you again tomorrow.